Welcome back to FinWeek Money Matters. While the global financial crisis has rocked the South African property market, we do continue to have a vibrant rental market which is attractive to those able to invest in property at the moment. Now, property syndication has proven a popular method for getting involved in the sector, but with a number of high-profile blowouts, we'll take a look at factors to consider before clubbing together and buying property. Michelle Dickens, Managing Director of TPN, Craig Schaffer, Partner at Bauman Gilfillian, and of course Thandi Sizwe and Mark still with me at the desk. Thanks so much for joining us. Michelle, I'll start off with you. Talk to us about the rental market right now. Is it buoyant?
Well, the rental market for both commercial and residential is buoyant. There's a high number of vacancies though in commercial market, whereas we're seeing some stock constraints in the residential market, and that's pushing prices up, which is nice for landlords. Payment profiles are also good. So we're seeing in the residential market that 82% of tenants are in good standing. In the commercial market, similarly 82%, although in the commercial market you're going to find it takes longer to collect a rent. So there's a lot bigger portion of that in the late payment category.
If you're looking at SA retail market at the moment, residential market at the moment, I mean, is it a case that people don't want to buy houses or they can't buy houses, that's meaning that they're actually sitting there as rental tenants rather than homeowners?
I think what has happened is that there was a big drive in the buy-to-let market in the 2006-2007 period, and a lot of those buy-to-let investors had over-leveraged. So there was a drop-off, they were trying to deleverage, lose some properties, and there hasn't been a big drive back into that market with buy-to investors buying back into that market. Also, there hasn't been a lot of development from developers, so stock has dried up in terms of opportunities to buy new buy-to-let property.
In popular areas at the moment?
Obviously location. So Western Cape is a great place to be investing in properties. Tenants in the Western Cape are fabulous.
From a rental perspective? From
a rental perspective. Tenants in the Western Cape are fabulous tenants.
Why is that?
One would wonder, but there are a couple of answers. Western Cape, your average income in the Western Cape annual income is quite nice, as it is in Gauteng, whereas in the Western Cape your credit lent per person is much lower than it is in Gauteng. So in Gauteng we have people that are much more overextended from a tenant perspective. So even though their income is high, they have much bigger commitments. So we end up seeing that the Gauteng tenants are the worst performing in the country.
Interesting. So we're over-indebted here in Gauteng. Property syndication, is it being driven by the fact that the retail market, there's opportunity there to get an income through grouping your money together, pulling your money together, and of course investing in a property?
Yes, of course. Pull your money together as you minimize your risk. The risk is spread over a group of people. Also gives you greater flexibility with what you can actually invest in. But that's not to say it's completely without risk. It's got to be carefully structured, and you've got to know exactly who you're going in with.
Yeah, Craig, I mean, one of the things that we do see is, even if we put the high profile, the share maxes and those kind of things aside, I mean, it sounds like quite fun to, a couple of mates get together, they buy a house in the Western Cape, kind of rent it out, and if it doesn't, if they can't find a tenant for a period, it's a nice holiday home. But what are the risks? How do you structure something in such a way, and what are the risks? I can just see it, it sounds good over a beer that 5 people go and buy this house, and then suddenly the next day somebody's not so keen on the idea. I mean, what are the
someone
risks?
Wants to pull out?
Yeah, I mean, what are the risks and how do you go about structuring it?
Well, at the outset, before you buy the asset, you've got to agree as between the 5 of us on exactly what's going to happen in those circumstances. If someone wants to sell his particular interest in the property, how will that be regulated? Can he sell it to anybody, any third party? Or must he first offer it to his fellow owners? How will they contribute towards the joint expenses? That all needs to be regulated in a typical co-owners agreement. They must also decide how they want to buy the asset. Do they want direct or indirect ownership, either through a company in which they all have a share, or company or close corporation, or do the 5 of us want a 20% undivided interest in the property, in which case we have a direct ownership.
What are the risks? I mean, the CCs seem to be quite popular at one point, but they've largely, it seem to be being phased out at the moment. I would assume that unless you've got a sizable portfolio, PCY Limited, probably not an ideal structure. what are the options? Do you do the trust or do you just buy it direct? I mean, what are the pros and cons of each method?
Well, it's largely personal preference. The advantage of doing it indirectly through a company, close corporation, or trust is does allow for greater flexibility when deciding to get rid of your share, your interest in the entity. You don't have to go through the formal deeds registration process. If on the other hand, if we each had a direct ownership interest in a property, we'd have to go through the deeds office process and have a formal property transfer.
This is obviously a good way to build passive income, Thandisizwe.
Yeah, it definitely is. I think if you're part of the group that's coming together to buy property, you can also decide if you want to either stay in that property or stay at home or elsewhere, and then you rent out the property. But I also think that it has to be part of the agreement that you as a group come together to agree on, because I think this is essentially a business to come together and say we're starting this to invest in property. So it must be part of the guidelines to say, if I want to use my portion of the house or the property or my room for rental purposes, what are the agreements, what are the guidelines, and obviously what are the rights of the tenant to the rights of the owners that are also occupying this property, because the tenant may not necessarily have all the rights that the owners occupy. But I definitely think that it is a form of then in that way, if you rent it out, it can definitely be a form of cash flow investment.
Yeah. When you're talking about specific properties and the type and the size of the properties, I mean, give us an idea of what you're seeing generally in South Africa. I mean, are people pooling their money and buying shopping centres, commercial property, or is it just purely around residential?
So we're seeing syndications in both commercial, retail and residential, but what we typically see is syndications concentrate either on commercial, retail or on residential. We're not seeing many syndicates that are
across the board.
Absolutely, yeah. When we look at the residential though, and TP and FNB did the yield price across that, I think it's important for people that are entering the market to understand what their yields would be. It's 8.5% gross yield for residential rentals. And of course, we've then broken it down between your freehold and your sectional title. And sectional title, the smaller, the one bedrooms are certainly outperforming even the freeholds.
That's quite interesting, because I mean, you would almost think that I mean, has it been quite a consistent trend over the last couple of years? Because I mean, 8.5 sounds all right, but I mean, buying listed property, I mean, you can get 8, probably 9, and then put a bit of tax. I mean, what's the compelling advantage of doing it through a syndication then?
Yeah, and that's exactly the concern, Mark. Even when we've done it over the last since 2007, where we were only seeing a 6.5%, and this is a gross yield. It's not a net yield. So we're not
I was going to say expensive
Yeah.
maintenance of the property.
Absolutely. So really, if you're wanting to be investing in residential rentals at the moment, you've got to take a long-term view. You've got to want to see your capital growth over a long-term period, because we're not seeing that's quite flat at the moment as well.
Not purely about income, passive
Absolutely.
income is what you're saying. What about tax issues around this? I'm sure you could perhaps talk to this issue. How is it taxed? It is differently, of course, depending how you structure it.
Yes, of course. If we each have an undivided share in the property in a direct ownership form, where the income, the rental income, or our portion of it would be added to our annual taxable income. Naturally, through a company or a close corporation, the company or close corporation would be a taxpayer in its own right, and would be dealt with in any other
CC.
Yes, yeah.
And liability-wise, I mean, if you're a direct owner, you're surely essentially as strong as liable as the weakest member in the syndication, in the syndicate. Because if one of them was to go bankrupt, is there any way to ring fence that setup as a direct owner? I mean, are you liable for the weakest member?
Basically, yes. You stand and fall with the weakest. Then whilst you can try and provide for that in a co-owners agreement, it becomes extremely messy. If one of the co-owners, for instance, had to go bankrupt. Yeah.
Going back to the issue around income, you talked about the residential side, 8.5% gross is what you're looking at, a yield there in the residential market. What about commercial?
So commercial, we don't, as TPN, we don't look at that information. The best would be to go back and look at your property, your listed funds. I think they're sitting at 15%.
Yeah, probably maybe a little bit less than that, but yeah.
So is it generally accepted to be a little bit more lucrative to be in the rental side of the market? In commercial, can we conclude that, or depends?
I think there's different risks associated with both, and so your risk on your residential side is a little bit less. On your commercial side, I think you've got to be more skilled in how you manage a commercial portfolio. And we also have to look at, syndicates might want to look at smaller shopping centres which are higher risk, higher vacancies, than going into a bigger portfolio or a bigger shopping centre or a bigger building where your vacancies are a lot lower, but you need more skill and you need more capital to get into those type of buildings.
What about leisure? I mean, like, I find this interesting is, you kind of, in your 30s and kind of anybody who's got a little bit of extra money saying, well, let's go and do a leisure home like J Bay or something like that. But however I ran the numbers, it never seems to really add up. I mean, what you really ideally want is a tenant in there for like 360 days and you take the other 5 days when there's a holiday. Much demand for sort of leisure type properties in those sort of Knysna's and J Bay type areas?
I think that would be very much a holiday-only type rental. So saying, oh, I'd love to have a tenant in there for 360 days and I'll take my 5. It's not going to happen. Yeah. You would have your holiday lets, and then for the rest of the period it would stand vacant as well. Plus you've got the risk of having to have the furniture and the maintaining it to a standard that a person enjoying a holiday would want to experience.
Tanya Sizwe, looking at the kind of all the arguments around here, I mean, how do you stack up the value of a property syndication relative to other potential areas to earn money, basically?
Look, I think there certainly are a lot of risks. I think there's too much bureaucracy, but obviously there are positives as well. What I would do is I would look back and say, why are we doing this? Is the strategy to invest in property to make money? And I think, then you look at, is it the property syndication structure, or do we group our money together and simply invest in listed shares? Because my view is that if you buy property, because of all the costs that you have to pay over, whatever period you've taken the property for, chances are, you may not see your money come in as quickly as possible. And I mean, like I said, there are too many risks. I think, but if you look on the other hand, investing in listed property, it's managed by, well-known investment firms. There's a lot of reputation. You know how it's going to grow. You look at the forecast, etc., etc. So, I think one has to balance those two and see which one works best for my particular situation and what I'm trying to achieve by forming this grouping or syndication.
It almost seems like you have to have a long-term investment horizon, longer term than you perhaps might have thought initially when it comes to property syndications. Craig?
Yes, definitely. It is a long-term investment, and that's why when going in at the outset, you need to have all your agreements, and you've got a plan for the future, and it's got to be a long-term future, and you've got to regulate all of that in whatever form you choose to go take to invest in the property.